The steepest drop in sales and prices have been in Toronto.
We haven't seen sales volumes running this low again since probably the 1990s.
Economists forecast in some markets, condo prices will fall another 10% this year.
I find it so annoying that every time I turn on the news, there's always something negative about real estate. And yes, I get that it's not a good market right now. And especially if you're sitting on the sidelines, it's easy to laugh for people that have, bought pre-construction condos or that are in the real estate market right now, or laughing at landlords. This video is not for you. This video is for people that are in the market, because there's still a lot of us that own real estate, that are still landlords and still continue to buy real estate.
So I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as we sit around the table with my friends to talk about the real estate and the ever-changing market in Toronto.
Real estate prices are insane. You could say that this is causing problems with productivity because people are spending money on housing as opposed to investing into other things that just get products going and get GDP going and make us productive. It is what it is because, like, in Canada, where else are you going to live? There's really three major cities that you want to be in. It's Toronto, Montreal, and Vancouver. And I would argue maybe not Montreal because of Quebec. No offense to anybody out there, but really just Toronto, Montreal. But where else in the world, in Canada anyway, can you go? Whereas compared to that to US, yes, real estate prices are a lot cheaper overall, but they have their own problems. There is 40, 50 different metros that you can be in. Like if you don't like New York, you can go to LA, or you can go to Chicago, you can go to San Fran, you can go to Dallas. All those cities are expensive, right? Like, don't get me wrong. But if you go to the ones that are kind of up and coming, like Houston or something, all of a sudden trends just move to another state, Arizona or whatever. We only have 3 places you can go to. And I would argue that most people don't really venture off from them, right? If you're in Toronto, you're going to want to stay in Toronto. I mean, aside from going to the suburbs, if you have a family or something like that, as a single person, no kids, there's no reason for you to move out to the suburbs. GTA is where you're going to want to be at. So I feel like there's a lot of fundamental reasons why people want to be in Toronto. Now, I'm not trying to justify our high real estate prices. Like, it's not good. The reason why this all happened in the beginning is not because of anything else other than really 2 decades of cheap interest rates, like 2% rates. So of course, people are going to speculate on assets. Kind of a no-brainer. If you borrow at 2%, but then your asset increases by 5%, 6%, 7%, and that's compounded. So you're putting 20% down, let's just say, the other 80%, that's really where you get your growth. You get the growth on the total price. Whereas your cash on cash was like, the returns were insane. I get why people bought real estate, and maybe you should understand that as well too. And the new housing minister that just got into power, Gregor, or whatever his name is, one of his famous quotes that he had was basically like, somebody asked him, will you make real estate prices go down? And he said, no, we're not going to do that. We're going to increase supply.
I think prices need to go down. No, I think that we need to deliver more supply, make sure the market is stable. It's a huge part of our economy. We need to be delivering more affordable housing.
And he got a lot of comments for that, but like, I kind of agree with that. Not because I'm a real estate owner, not because I'm a boomer. It's because like so much of our economy is dependent on real estate. For better or for worse, it is just what it is. Banks' lending portfolios, you're looking at about like 20 or 30% of their portfolio based on secured real estate assets. If those prices drop, it's going to be a big catastrophe. Not only that, so many industries depend on it, like construction, mortgage, real estate, like all that. It just so much depends on real estate. I feel like they can't drop the prices. And especially if you're the government in power, imagine how popular you're going to be if you crashed somebody's home prices by 50%. And that's what it takes for people to get in. Or maybe there's new ways to get affordability, right? Like they're trying to adjust it with purpose-built rentals, with affordable housing. There's other ways that you can solve for affordability, like the new 4-plex zoning that's allowed in all of Toronto. Eventually, they're pushing it to 6 units. If you get 6 units, maybe you get together with a friend, you live in 2 units, and then you rent out the other 4 to supplement the income. Or maybe you get 6 people together, but you have your own little units and you co-own that one piece of land. You're basically minimizing the land cost in it, which is a huge component of the cost of real estate. I mean, so it is what it is. I don't feel prices are going to come down much more. There's still a lot of fundamental reasons of why they're going to stay the way they are. Now, if you're caught in the middle of this, let's just say, I call them the 6Ds, right? Death, divorce, debt on the bad side. Like, if you're going through those situations, if you're divorcing your partner, you don't want to be in that house, or you just have to sell it because you don't want to be with that person anymore. In the bad cases, there's some good amicable divorces, but for the bad ones, you don't really care. And especially if you're in debt, you have money issues, or somebody died, say you inherited a property. If you're going to sell it, like whether you make $1 million or 900,000, like it's kind of essentially free money anyway. So I'm not saying those are good things. Those are the bad things, but there's also the good things, the other 3D. And it's really diapers, diamonds, and distance. Distance meaning like you're relocating for a job maybe, or promotions, but it's at a come up with another D. But essentially, you get a new job promotion. You got a salary increase. Maybe your partner or something, just the income just increased in the household. And now it's time to upgrade that house. That's a good reason to buy real estate. And if there's diapers or diamonds, you partner with somebody or you have a new addition to the family. I'm sorry to say, you can't do it in a 1-bedroom condo. It's really hard. Some people do it. But if you have the opportunity to trade up, especially in a market like today when prices are down, why not make that move? I feel like there's life situations that happen all the time. Sure, there's less and less investors. There's not that many. Some people are still putting money into programs like the CMHC, MLI Select programs, where there's government incentives for commercial financing. There's other people that are taking advantage of the low market if they're buying in cash and not using much leverage. There's a good opportunity to buy right now. But there's people that are selling low to buy low again for those reasons I just mentioned previously. It's not like the transaction volume has gone to zero. Certainly, motivated buyers are the only ones that are buying. Also, motivated sellers are the only ones pricing it right, and maybe the ones that have the best properties are the only ones that are selling. Yes, there's less transaction volume, but it's not that bad. We're still on track for 65,000 transactions this year. I think it was estimated for 67,000. At the peak when, the COVID money was around, it was 110, 120,000 transactions, so double. But a normal market was anywhere from 80 to 100,000 transactions in the GTA. We're not that far off. There's still sales happening. Our team, for example, we're doing okay because there's still people in life situations that are selling. I would say that investors are not buying anymore because the numbers don't make sense. When we went to 7% interest rates, none of the numbers made sense anymore, even with 50% down. But at 4% rates compared to 2% rates, it's still really high. So if you think about people that bought pre-constructions at the peak of the market, 2018, 2019, 2020, when things were just kind of still going astronomical, it basically went on a tear from 2018 to 2022 because of all the immigration that happened combined with cheap debt. It was the only way to get ahead by just buying another pre-construction condo. It was so easy to buy. You put your deposits down, you scale it up over a period of anywhere from 2 to 4 years, depending on the project. You get interest on the deposits. A lot of good incentives just to get people to buy pre-construction condos. So a lot of people did buy them. If you're one of those people and you're about to close on your property and the deals aren't appraising for what you bought them for, so you got to kick in some more money, but maybe you don't have that money, or maybe your job situation changed and you aren't able to get the mortgage anymore. Well, what do you do? I know it's been tough times for a lot of people. You're seeing a lot of stuff in the media about people defaulting because they don't have enough money to make up the difference, or they just can't get the mortgage because situations have changed. Lending criteria has tightened as well too. If you're not one of those people and you did buy pre-construction and you're choosing whether to close on your condo and then put more money down potentially, or even none at all, if you got a blanket appraisal, but you're still negative cash flow, you're subsidizing your tenant just to live there. Even if it's rented out, you have to pay another $500, $1,000, $2,000 even. It's happening to me too. But you have to subsidize your tenant from living there. You get the headaches of having a tenant, but also you're not getting benefit because your mortgage is not being paid down faster. You have to sink in some cash flow. What do you do? It depends on your situation. It depends on your personal circumstance. But I would think that if you sell now, you're basically stamping in your price of the bottom of the market. Could it go down a little further? Yeah, it probably could, and it probably will. But it's not going to drastically go to zero. I don't think it'll even cut in half even. I think at some point when our economy starts picking up again, when interest rates start going down because our economy is doing not so good, and the supply crunch hits when there's no more supply being built. Talking about the supply crunch, at least for the high-rise condos and things like that, since 2022 when rate hikes started happening, well, nobody's been buying pre-construction because the numbers didn't make sense, I was saying, when we're at 7% interest rates. And since then, everybody's been kind of scared of buying pre-construction. We're at all-time lows, alarmingly all-time lows for new construction sales, which means that there's no new construction being developed. If you say a project takes about 5 to 7 years to build something, from 2022 to now, that's basically when all the supply will stop. So all the stuff that's closing now is from people that bought from 2018, 2019, 2020, and even up to 2022. After that, there's going to be no more supply. I think for the long run, it kind of still makes sense to own real estate. It's going to come back at some point. It's just all a cycle. And if you sell now, it doesn't make sense. And you got to think back about all the reasons why you bought real estate in the first place. There's a lot of good fundamental reasons. I get that you have to increase rents to make the prices go up as well too. There's got to be a fundamental, they got to be tied together. Rent goes up, your prices go up. And generally it's about 20 to 25 times that rent amount is basically what the number really works out to. Because if you put that money in anything like a GIC or something, if you get less than 3% in a yield, it doesn't make sense. It's just better to put in a GIC. But typically, traditionally the cap rates in Canada, or at least in Toronto, were 4%, maybe even 5% in some other GTA areas. If you're looking at 4% of the income, 1 divided by 4% is 20 times, right? So really, whatever you're getting at the end of the year after expenses, times it by 20 or even 25, depending on what market you're in, that's really what the price you should be paying for the property. At some point, all that got detached from it because the demand of it was just too strong, right? At least for investment properties. But at some point, we're going to get back back there because I think there's going to be more and more renters. Just the wealth gap is just happening. It's just getting bigger and bigger. People that own assets are going to stay owning assets, and generations is going to pass down through generations. Whereas people that don't own assets, it's just going to get harder to get into the market. If you think about inflation in general, asset inflation is a big problem. And that's, why our interest rates went up so high. But if you look at the basket of goods, the CPI baskets of goods, the shelter component is like a third of the basket. Overall, the price of housing is really a good inflation hedge. And that's one of the reasons why you got into investing and owning real estate in the first place. There are many other reasons, such as it's tangible at the end of the day. It's real. That's why they call it real estate. And it won't get carried away. There's laws that protect real estate rights in terms of, such as the land registry that really protects the land titles. And our laws fundamentally do protect property ownership. You can't just take a land and just say all of a sudden it's my land, right? Compared to some other parts of the world that are third world countries. And there's other reasons why you want to buy real estate, such as cash flow. Whereas other things like a stock that you just keep banking on appreciation, or Bitcoin. Yes, I guess Bitcoin does make sense because there's only 21 million coins, and there's a theory for that. Whereas real estate, you can actually rent it out and you get rental income on that. So you'll get cash flow eventually once the thing is paid off. All the meanwhile, it'll appreciate as well too. So to me, there's no better investment than real estate personally. I know Robert Kiyosaki, famous Rich Dad Poor Dad author, he says that your home is not an investment, but I would argue differently, at least in Canada or at least in Toronto, because home prices are so expensive, with the average price being over $1 million, like $1.1 million. That is a large investment, especially if it's paid off over 25 years or 30 years, whatever your mortgage is. If you accelerate your payments, you could probably pay it off faster. You can always borrow against it, take some cash out. You're borrowing against it, you haven't realized the gain yet. Even when you do sell it, it's capital gains exempt. Where else can you get that? So a lot of tax advantages. It's an inflation hedge, cash flow, it appreciates. I would say you can force the equity too. You can force the appreciation. It's not so much of condos, well, maybe kind of condos where you do some renovations, like cosmetic, but it's more so amplified in multi-unit housing, like even your own or freehold property where you can add another structure on it, like a garden suite or lane suite, or even add another 2-3 units in your building and cut it up into more units. You can definitely add more value to it by the reverse, the rental income to what it's worth, right? The cap rate stuff. Really with multi-units, when you get to larger units, like 10 units, 20 units, 30 units, 100 units, that's when you really see the effects of forced appreciation. So more about that later. If you want to learn about that, just reach out to me. Another reason why I like real estate, and you probably feel the same way too, is because you have control. You have direct control over it. If I bought a stock out there, just name any of them, you have no control of where it goes. You don't know if the leader of the owner of the company is going to go crazy. All of a sudden the stock plummets. Whereas with real estate, if it does plummet because the market drops in general, because right now, you don't have to sell, right? As long as you're making your mortgage payments and you're okay keeping it, if you have a mortgage even to begin with, it just kind of makes sense to hold it because you have direct control of when to sell and when not to. And if you don't want to sell, you can always refinance it and take some equity out that way through a cash out refi. Anyway, and if everything goes worse, you can always rent it out. If you feel like you need another bedroom, let's just say, for example, you can always rent out your place and rent another place, a larger place, without having to make that trade, without having to pay agents, without having to pay land transfer taxes, get a new mortgage, all that kind of stuff. There's ways that you can still maintain and hold your asset while changing your lifestyle. I'm a big believer in owning real estate. At the end of the day, it comes down to your personal preference, but realistically it comes down to if it's your own primary residence, there is security of tenure. No landlord's going to knock on your door and say, you have to get out because, I want the place for myself or my kid or whatever. It's your place, right? And you can do whatever you want with it. And you're going to be paying a mortgage, so you might as well be paying your own mortgage. Anyway, that's the way I look at it. There's different ways of owning real estate. You can have direct ownership. You can have indirect ownership, through stocks or REITs or whatever, even mortgages, things like that. But if you're talking about direct ownership into real estate and you're talking your primary residence, it's capital gains free. That's a huge benefit. You need a place to live anyway. And if you're talking about an investment property, well, there's a whole bunch of strategies there. So if you want to talk more about real estate, just click the link below and you can book a 15-minute chat. That's a mutual time for both of us. I've been in this for 20 years, so I've seen a lot, whether it's residential, commercial, leasing, pre-construction, whatever it is. Anything to do with real estate, I pretty much know. And we have a team of people that can help out. We have a property management company as well, too. So if you have any questions, any problems that you have, every situation is very unique. Let's chat about it. But bottom line, let's talk about the positive spin on it. Look, it's not going to go to zero. Your real estate is not going to go to zero. At some point, it'll bounce back. It's all a cycle. It all depends really on interest rates at the end of the day. Ignore the news. Just don't pay attention. If you're not transacting, who cares? And if you're sitting on the sidelines, making those comments, it's because you're sitting on the sidelines. All right. Thanks for watching. Catch you next week.
Add it up.
Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe. But more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.